5 seconds here. Let's get live on everything. Okay. We are almost there. Kicking off Wednesday, the 18th. Market's down a little bit this morning. FOMC day. Let's hop in, get some chat up and running. Okay. All right. We're live on Zoom, live on YouTube, live on Facebook, live on LinkedIn, live on Twitter or X. Let me get the screen share up and running. Okay. Chat's open. Morning, Deanna. Chat's open for everybody. Chat's open on YouTube as well. Okay, daily profit plan. Let's get started. A couple things. Nice win yesterday. Had a full winner on daily profit play. Those bear call spreads worked out nicely. I didn't get filled on anything else. I was trying to catch some lows. Didn't have enough volatility. Prices were pretty quiet for the day. It really was just that early pop, and it just slowly faded back down. Didn't fill the gap. Still stayed positive for the day, but a nice result. I updated the expected move box to 53.6. That is this morning's reading on my Tasty trade. Somebody give me the reading on Thinkorswim. I can go grab it right here, or if it's lower, tell me. Who's got Thinkorswim handy? Look at SPX for the day. What's the plus minus on Thinkorswim? Okay. Moto, what's happening? Made some beautiful profits. Good stuff. 54.6 on Thinkorswim. It's higher. Man, the back and forth. The back and forth between Tasty and Thinkorswim. Who called it best? All right, we'll take the higher of the two. It is a Fed day. VIX is going up, by the way. We had like 21 VIX. Now it's up to 23 and change. We'll keep an eye on this one. I think I did some calculations around 22.75 just a few minutes ago. Let's take a look at SPX option chain, plus minus 54.8. Okay, 54.8, which means I will adjust my expected box move to 54.8. Make this gap adjusted. So 54.8. I'll take this on the 1 minute time frame. So when we open up this morning, we're going to be opening lower. So my gap adjusted indicator. This is the close price. Okay. So it's going to go up 54.8. It's going to gap adjust to the 0.5, 5% or so. And let's say we open up down here, we'll go down the 54.8 here. So we'll have, some type of box this way, give ourselves a little bit more wiggle room and see if that's kind of safe for the day. Gamma readings are pretty interesting. Initially, they were much higher. Much higher. I mean, are we really going to see a Fed spark the bullishness today to get to 67.90 or 6800 today? I mean, if they're going to do it, they got to do it from a 0.5% hole, because we're going to start down today. Make sure I'm not missing anything gap-wise in futures. We had a gap yesterday, but not this morning. So that's what I missed yesterday on that gap. I thought we were going to have a huge gap, 4%, 1.5, but I missed this that gap yesterday because all the future stuff got rolled out to June. So that gap, but again, we filled it in 23-hour market, and we're right back to where we started. So is this a spot to start? I mean, honestly, this might be a good spot to start from if the market's going to work its way up, but I don't know. I don't think this is not the type of day that I want to take a bunch of chances. We have a VIX that was around 21.5 this morning. Now it's up to 23.46. Keep an eye on it. It's still elevated VIX. It's still elevated VIX. Elevated VIX. All right. Zoom isn't on. It is on. Should be on. Everyone's good on Zoom, right? I'm only showing like 12 people in Zoom. I'm showing a lot of people on YouTube. Yeah, I'm pushing. I'm seeing comments. So, yep, I will put Zoom and YouTube is open. I'm pushing it on everything right now. Okay. Okay. All right. Well, I mean, Gerald says good. Zoom is good. Gregory says good. Dan's yes. Okay. All right. Anyway, you're here, right? You're here on YouTube. I got the comments. We're here in Zoom. We got the comments. So you're in the right place as always. Okay. All good. Yeah. I'm curious. I mean, usually we have like 300 people in Zoom, so I get it if the link was being weird. All right, but you're here on YouTube. That's why we run both. Have a backup plan. Kind of like trading. All right. So slightly higher VIX. Little prep this morning. Expected move box. If you like the indicator, you can get it for $20. Send me an email, chrispulverpub@gmail.com. 54.8. I'm taking the higher of the two. That is the Thinkorswim this morning. Tasty was 53.6. Thinkorswim is 54.8. Um, we haven't had a move outside of my expected box here for quite some time. I mean, and I'm not saying that it's going to happen. If anything can open up the floodgates of volatility, it would be a day like the Fed day, FOMC, where a lot of volatility is going to be stuck and coiled until 2 p.m. So we had hotter inflation this morning. That was one thing that was interesting to read. Here's your economic calendar. Um, we've been seeing a lot of this. 8:30 a.m. news came out, forecasted. Let's just go year over year. This is what I pay attention to. Year over year core PPI, producer price index. Revision was 3.6 down to 3.5. Forecasted 3.7, came in 3.9, higher than forecast. Okay. Year over year headline PPI 2.9, forecasted 2.9, came in 3.4. Another pretty high reading. Now, that's one wrinkle to the inflation story. Obviously, right now, what we're seeing with higher oil prices. Let's go to what was I going to look for? Trueflation. Trueflation, which I have right here. I mean, trending lower and then bouncing hard. We're now about 0.9% higher from where we had this bottom back in around early February. I mean, again, the data that we see from CPI, PPI, PCE, I would say the trend lower is done. Now it is, inflation likely returning in some way, shape, or form. Are we going back to 9% inflation? Probably not. But I think this is just gonna make everything stickier, right? Everything stickier, and we'll find out more once we have CPI, PPI round. I guess whatever round 3, round 4, because we'll have April prints for March's inflation. That's what's going to take the oil shock into consideration. We'll see what those numbers look like. And that it could be spun that way as well. Just saying, we could have the narrative be spun where it's like, well, that was because of the oil shock. It's been under control. Blah 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 blah. I don't know. Take it for what it is. Inflation's not going away. Is it a huge threat and problem? Well, I mean, not not all by itself, but oil prices up 115% for the year. That's a problem. That's a problem. So technically, here's the daily chart. This is the CFD for the S&P 500. Um, we're at 66.85. The market's been making lower highs and lower lows. I still, I mean, I still look at opportunities where every single day I'd like to fade the market. Call me crazy. I like to fade the market every single day. Um, I just think right now, like until I see the bulls like rip aggressively higher, and I said this yesterday, I'd mentioned that what, if we have this level of support and the market is turning from that, or let's say that we bounce up to that level, well, I could see the bears stepping right back in the near term to push it right back down to finally hit this breakout point around 65.50. We will see if there's some follow through there today. If you're in my double ups, we have a trade that's sitting right here that costs us 70 cents. And if this trade gets in this window between 75.50, 75.75, 7600 zone, if we get in that window, this could be worth a couple $1,000 by Friday. So I do want to keep an eye on that, especially if the market's going to head lower today. If we head lower today and have some follow through by Wednesday, Thursday, Friday into this zone, I'm hopefully going to see some decent profit. Okay. Could it go lower? Maybe, but it's been just a battle royale market. bulls and bears. We're only down, by the way. The crazy part is we're only down like 1.5% for the entire year. That's what's crazy. It seems like we're in a friggin' bear market with all the dispersion going on and all of the. I mean, look at the market breadth. I talked about this this morning. I looked at this yesterday. I was shocked to see how bad this is. So this is how many stocks in the S&P are above the 50-day moving average. And when we started out this year, remember this whole year, the big narrative was the rotation trade. Get out of the top 10 stocks, get out of the Mag 7, put money elsewhere. What sectors were beat up? Consumer staples, pumped like crazy this year. Energy, pumped like crazy this year. Energy is one of the only kick-ass sectors for 2026 right now. Financials started out with a bang, gave it all back. Industrials, materials, the physical build out of AI, scarcity, all these things. These are not like healthy sectors for bull markets, but they are typically the last innings of a bull market or this major rotation that's been happening. Okay. I'm not sure what I'm seeing this in YouTube, Deanna. Morning, Chris. Can you let me into Zoom? I don't know I don't know what's going on with Zoom. Did we post like a crummy link in? Hang on a second. Yeah, I mean, I opened it up this morning. I see people in the chat, so I'm just gonna make it. Let me make a comment here. Live session this morning. If you're having difficulties loading up Zoom, please join. There. Just jump onto my YouTube channel. Okay, just jump onto YouTube. You can watch it on your phone, watch it on TV, watch it on a computer. You can jump into the chat. So anyway, you know how to find me. All right, market breadth. How many stocks above the 50-day moving average in the S&P? Only 34%. What I was going to say is when we started out this year with this major rotation, we still had over 60% of stocks. 60% of stocks in the S&P above the 50-day moving average. That's a pretty good sign for a strong bull market. That has deteriorated in a big way, substantially, right? So now we are at 33.5% of stocks above the 50-day, which means 66% of stocks are below the 50-day moving average. That is correction territory. Doesn't mean bear market, means correction. You pair that with the 50-50 split of how many stocks are above the 200-day moving average, which is typically a very strong, if it's above the 200, it's a buy zone. If it's below the 200, it's a sell zone. We are right on the cusp. 50% of stocks. That's a lot of stocks that could tip us over into a sell zone. Maybe hold the line and get us back into a buy zone. I don't know what's going to happen yet. Right? So I'm just saying market breadth is deteriorated aggressively in 2026. And that either is one, people are waiting on the sidelines, hoping for better signals, staying into bigger cash positions, trying to avoid some of this chop and volatility. And this could be from money manager side. This could be from institutional side. This could be from retail side. I don't know. But it does seem like we have like a very light volume in the market right now. I mean, day to day, it's been pretty chill. I mean, yesterday, gapped up, markets did next to nothing. You know, the market, I'm ballparking this, but the market was only down about 23 points for the entire day. The day before that was a gap up, and the market essentially finished flat for the day within a couple of points. This one, you know, sold off, but still didn't get through the expected move, which is what we want. Same thing here, you know, gap lower, still contained on the gap lower. You know, very quiet. So I go back to this. We say the saying all the time. Implied volatility is typically showing greater than realized volatility. Expected move is typically showing greater than actual move. This is good for us. This is what we trade. This is what we benefit from. So this morning, VIX up to, you know, short-term highs around 23 and change. I do want to keep an eye on this today. So we have a recent high here on 23.86. Let's crunch the numbers. 23.86. So potentially about a 1.5% move. Okay, let me get this over here. I've got we have a contractor coming this morning that I don't want to miss his message. So let me put this front and center. Don't fall over on me. All right. So about a 1.5% move. That's kind of the VIX box extreme. I had this calculated here in my DPP indicator. Here is my VIX box. I've centered it at 67.16. Futures is down about 0.46%. We are going to be opening lower this morning. I'll still keep the VIX box the same. Okay. So what I'm saying today is if I can sell, VIX box extreme around 6,800, you can see the gamma levels up above that a little bit, 6790 to 6,800. I mean, I'd like to think it's difficult for price to get there today, but it's FOMC day. It could be a reason for volatility and direction and flows, good or bad, to come out of the woodworks and jump back into the markets and see some volume pumping up today. Good or bad, right? So we are in negative gamma most of the day today. Most of the day is going to revolve around all of your volatility is probably going to be this afternoon from 2 to 4. So the market, opens lower and let's say stays lower. Now, what I'm going to do today for prep, what I'm going to do today for daily profit play is most likely get levels, but not force a trade. And the reason why I don't want to force a trade is because we can put on a trade and we can follow the perfect textbook today. Let's say that we have our 54.8 expected move box. Okay. Market's going to gap lower. We have our high, we have our low. I can sell my calls, I can sell my puts. And then what happens? You're thinking, well, you take the trade around 9:35 in the morning. What about time decay, Chris? Shouldn't it be out of the trade in the first couple hours of trading? In theory, yes. But for some reason, volatility in time decay for an FOMC day is very different. For some reason, time decay looks like this. And then at 2 o'clock, it's like, okay, if you're inside the expected move and nothing happens at 2 o'clock, then you have like this massive fall towards the end of the day. But volatility is very sticky during FOMC days. So I don't like to place these trades and then sit for literally 4 to 5 hours and then still have to wait through FOMC anyway. So today is one of those days where I will prep, I will plan, I'll have my levels, I want to watch. I think the market will still stay within the expected move because it typically does, but we might not see any dramatic movement until this afternoon. Okay. So what I'd like to do this morning is let's find out where that expected move low is and that expected move high. Set a couple of chart alarms on that area and maybe look at could we play a bounce later in the day for a better credit. Could I do a 1-to-1 today? And that way I risk a little bit less instead of putting out the typical like I'm risking 400 to make 100. I'm risking 900 or 800 to make a couple hundred. I don't want to place that trade with no payment on time decay until after 2 o'clock today. So 2 p.m. rate decision is expected to be a pause. Nothing's going to happen on the Fed today. Jerome Powell's comments, maybe the market cares, maybe it doesn't. He's on his last couple of months here as Fed chair, and then it rolls over into worse, and we'll see what the market treats it like. Okay, but we'll have a plan, levels to watch. I'll be back this afternoon for FOMC. Today is Wednesday, so I've got a busy day. I did a morning session, got this session. I've got another segment at 11:30 a.m. I'll be back live at 1. I'll be on for closing playbook and build a trade with Nate and Kane at 3:30. So it's going to be a busy day. But obviously from 2 to 4, that's where all the magic's going to happen anyway. So we'll see what price gives us. Okay. All right, good stuff there. Deanna grabbed a little scalp on some NASDAQ futures. Nice. So staying low until FOMC. Yeah, I'm just going to get the levels prepped and ready. What I might look to do, and I don't know. This is, I mean, since it's after 2 p.m., let's talk about a couple of those like low risk, high reward trades. Okay, so we're going to open in a couple minutes. We'll get our levels. We'll get our expected box to print. This is the higher of the two between Thinkorswim Tasty, 54.8. Couple ways to position ourselves. I don't know. I'd be interested to see if this trade works. So I'll give you the hypothetical. We'll get the real numbers here in a moment. But let's say that the gap lower, which is around 0.35% now. I'm going to ballpark this. So from close down about 0.35% puts us right there. Okay, so that's going to be roughly our open. We take the previous day's close, go up around 54, almost 55 points. That's roughly going to be our top. Okay, 67.71. We take the gap lower plus the 54. Let's go 55 here. 54.8. I'll just go 55. It's pretty close. Okay, we'll get the exact numbers in a second once we have opening bell. But this is roughly going to be my expected box for the day. So gap lower plus the expected move, previous day's close plus the expected move, and VIX right now is 23.2. I'm going to set a chart alarm to see if we break these intraday highs on the VIX, because that'd be a tougher thing to call the bottom if the VIX is going up. Okay. Now, what I was going to say is this. If this is my projected low of the day, one thing I'd be interested in doing is not necessarily saying like that has to be the low, but let's just say this is 66.40 and this is 67.70. Okay. One trade I would consider looking at today is if price is going to find this level and bounce, or find this level and reject. There's a pretty nice way to set these trades up later in the day that offers us lower, not low, but like lower risk, higher reward. So if I did for this trade, if I want to call the bottom, I could sell a 67.40 put. So -1 67.40 put, and then a +1 at 66.40. So that's 100 wide, right? That's 100 wide. If I can get this trade to fill for, let's say, $95 credit, $96 credit, $97 credit, I'm only risking $5, $4, or $3 to make up to $100, which is 10,000 bucks. So extremely low risk, extremely high reward. What the market would have to do is come down to test this level and then close above it, right? I think that'd be a fantastic trade. If we have 67.71, 67.70, I could sell the 66.70 call and then buy the 67.70 call. Same thing. It's 100 wide. It's 100 wide spread. If I can get this thing filled for 95 or 96 or 97 credit, I'm risking 5 or risking 4, risking 3 to make up to 10 grand. That way, if price can get up here and reject, we come back and maybe have a neutral day. But if we can get a low risk, high reward setup and the market can stay inside that expected move, that's a very, that's a very decent trade, in my opinion. So that's one way to do it. The other trade that I might be looking at this morning is, because we've had recent lows around 66.20, is maybe trying to catch a trap down here with a broken wing butterfly structure, maybe going like 20 to 25 wide off these lows and see if something is lined up around like 6,600 or so. Okay, so we'll talk through it. We got plenty of time. We'll be live here until, I don't know, probably 10:30, 10:45, maybe 11 o'clock. Thanks, Don. Appreciate that. CPI, PPI having a major impact. I mean, not necessarily. It's just another newsprint today. So markets are down. I mean, we're starting lower. Futures down 0.4%. Here's our reading. So market is gapping lower like we thought. We're down to 6,700. Let's take a look at some levels this morning. So I have my VIX box. VIX hasn't broken out to 2391, 23.91 divided by 16, about a 1.5% move. That'd kind of be the extreme of the day so far. When does that change? If the VIX goes higher, that calculation changes. Okay. If the VIX goes to 25, 26, 27, you've got to take into consideration the higher VIX calculation, which means your low is going to have to be adjusted lower. Okay. All right. But right now we're hanging out at 23 and change. So again, I love the fact there's going to be volatility today. The issue is you can follow a textbook daily profit play trade and see we're not going to get the love that we typically get. Like right now, if I just did a, iron butterfly, I'd love to take that trade because we have little to no movement, but it's such sticky volatility that I don't get the payout that I want. So I'm not going to force a trade. Let's talk about our levels. We have our expected move box here around 67.70, almost six. I'm just going to round it up, 6771. Okay, because we have 6770.88. With the gap adjusted, we have a low around 6636. Okay, 6636 with the gap because we had a gap adjusted. So 6636, I'll go a little bit lower here, and 6671. So if you're going to write that down, take a screenshot, obviously get your own expected move box. You can get it. Send me an email, chrispulverpub@gmail.com. So 6771 and 6636. Okay. Now it's just about prep. I'm not gonna force a typical daily profit lay trade. Okay. Reason why is we post this trade, we take this trade this morning, and we have to sit on this trade until 2:30 in the afternoon to get paid. I don't want to do that. It's been, I mean, has it worked in the past? Yes, but I never love sitting on an FOMC day all day with a trade that should pay us within, a couple of hours. So my plan for the day is to watch these levels. I think I'm going to try to catch something a little bit more in like the 6,600 zone. Remember with the VIX today, 23 and change, about a 1.5% move. If we opened up, let's find opening price. If the VIX doesn't go higher and we have about a 1.5% extreme on the day, we open here. 1.5% puts us around 65.91. Well, I can build a trade there. So here's a pending order. If I go 18th, okay, could I go 66.20? I'll go 15 by 95 or 10 by 90. That gives me a 20 wide profit trap. Okay, so I'm going to go 20 wide and then 25 wide for a broken wing structure. Right now, this trade is 45 cents debit. I'm not interested in this trade at a 35, 40 cents debit. I'm interested in this trade in any type of credit. Okay, I'm going to try to go after a $1 credit. I don't think this is going to fill. It's not going to fill. Chart says, it says 60. Oh, yeah, you're right. Yeah, you're right. You know what I was saying. 67.71, 66.36, top and bottom. Okay, so if I build this trade out right here, this would be, risking 400 to make 100. But most importantly for me is if I can get any credit on this trade, it offers up a $2,000 profit trap. That's really what I want it for. So I'll put it in for $1 credit, pending order. Okay. I will watch this one for the day because if this trades for even like 10 cents credit, 5 cents credit, 15 cents credit, I'll probably still take the trade. I'm using the VIX box extreme to call the lows. This would be breaking fresh lows in the market. I mean, I could be wrong. I could still be wrong, but I'd feel a lot better like later in the day at 2, 3, 3:30. If we're hitting that profit trap, this starts to pay a lot better at the end of the day if markets are down towards that VIX extreme. So I'll keep an eye on this one for any credit. If I get filled for $1 credit, which is difficult to do, but if I get filled for $1 credit, I'm risking 400 to make 100, but I also have a $2,000 profit trap. If I get filled for 10 cents credit, I would be risking 490. I'm risking 490 to make 10. I'm not excited about making $10. I'm more excited about the potential of that profit trap. Okay, so that's one. On the extreme upside, well, I'm not going to lie. Take the gap here, go up 1.5%, and that puts us up to around 68.16. Okay, and again, I'm being really conservative here. 68, I can build a trade there. 68.15, 68.20, let's build a trade. So to the upside, 68 and change. If I go 6,800, 68.20, that's a $2,000 profit trap, puts my break even around 68.40. So I'll go 45. I mean, right now that trade costs 10 cents. That's a debit. I want a credit. I would still take this trade at any credit. Literally, if I can get 10 cents credit, I'll probably take the trade. I risk 490. And again, I'm not excited about the 10. I'm not excited about the 10 cents. I'm excited about that $2,000 profit trap at what I think is a pretty calculated top. So pending orders right there. Okay. So if I'm going to kind of call the bottom, I'm going to call the bottom around the 6,600 handle and try to position for a trap down here to make some money. If I'm going to call the top, I'm going to use my gamma levels. If that call side for me, that would be break even 68.40. We'd have to go. We have to hit through positive gamma all the way into these 70, 80 resistance zones, all the way to 25. That's my top gamma of the day. 8 ATR percentages is probably way up there. We'd have to have a 150% ATR. Yeah, for us to be to have a threat today, we have to have 150% ATR, which I think is going to be pretty difficult to do. Okay. All right. So here is some real-time stuff. These are my boxes from yesterday. Had a nice full winner yesterday. All right. I'm just going to delete these boxes since they no longer apply. Current prices, current gamma, hanging out around 6,700. It's all about the Fed today. This is the good, the bad about Fed. It's like the market doesn't do anything all day. And then after the Fed, it probably has some volatility here or some volatility here. What I rarely see for Fed days is I rarely see the market go one direction and stay there for the day, or go one direction, stay there for the day. In fact, usually it's this. The rate decision comes out at 2:00. Press conference starts at 2:30. So from 2 to 2:30, the market makes a move. And then from 2:30 to 4, the market does something opposite. Okay. So it tends to be a very noisy indecision day, but a lot of the volatility is after 2 p.m. to 4 p.m. Okay. All right. What is the best spot for me? I'll post these. I'll copy and paste them. I'll put them in Restream so everyone on YouTube can get the post. I'll put it in Zoom. So I'm putting these trades in. Again, they're pending orders, not filled. I'm essentially looking to call the top or the bottom safely, do so with a profit trap. I'll put them in Zoom first, and I'll copy and paste and see if it'll take it and format it in my YouTube comments. So this will be bonus trades. Bonus trades, FOMC. I'm doing SPX, 318 expiration. On the bottom side, I'm going the 6610 put, the 6590 put, and the 6565 put. A dollar credit pending. Looking for any credit. Okay, if I get any credit on this trade, I'll still take it. I'll still put it in for $1, but if I see like 10 cents, 5 cents, 15 cents, I'm probably going to adjust to take the trade just because that is a credit, doesn't cost me anything, and I have a profit trap sitting at those lows. That's one trade. These are coming in the chat here. Just bear with me. Give me 60 seconds. Call side, 6,800, 6,820. And then 45. Okay. It's in the chat for everybody in Zoom. See if this will take and format it. Let me see how this looks like. All right. It's a little messier. It's a little messier on YouTube. If you're in my Telegram, let me just post it in Telegram. Oh boy. Yeah, so anyway, let me just type this up in Telegram. It'll be a little easier to read. Okay, so bonus trades. Today's FOMC typically throws a volatility and time decay wrench in our daily profit play. So I'm sharing my trades for a, profit trap, top and bottom today. And I can just post this. Okay. That way it's a little bit easier to read in Telegram. It's in Zoom. It's a little messier in the way it's formatting. It looks like it's formatted kind of weird in the YouTube comments or chat, but hopefully you can see it clearly here in Telegram. So SPX 318 expiration. So these are broken wing butterflies. The way this trade is going to work is I have a 6610, 6590. That is a debit spread. That's 20 wide. And then I do a 6590 by 65. That is 25 wide. That's a credit spread. I'm trying to get that trade financed in any way, shape, or form for credit. So if this fills at $1, which it probably won't, but if it shows $1, that means I'm risking 4 to make 1. Okay. But that $1 profit is pretty high probability. The profit trap is what I'm the most interested in to make money on this trade. It offers up to a $2,000 profit trap. Okay. And it is below the recent lows that we've seen. We had lows at 66.36. We had lows at 66.24. My break even price on this would be down to 65.70. That'd be my break even. Okay. Again, are these trades 100% guaranteed safe? No. The market could fall further and I could lose, but it's defined risk. Okay. So I'll keep an eye on this. Like I said, on the put side right now, if this offers any credit, I'm probably going to take it. If the call side offers any credit, I'm probably going to take it. If I adjust these trades and I take 10 cents credit, 15 cents credit, I'll change it in Telegram. Okay. And that way I'm going to be sitting and watching these for the day. But I'm not taking a trade this morning because even if I do everything right and the market goes nowhere, time doesn't pay us the same way on FOMC days. And that's frustrating. So I'm just going to stay out of the way for right now. Okay. The other trade I wanted to look at was, as we mentioned earlier, now that we have our highs and lows, 67.71 to the top side or 66.36 to the downside. Now, let's look at some gamma. I mean, what's crazy is I don't have anything down here. Let's look at Gex Live for SPX. We're going to be in negative gamma today. I do have a 6600. That's a pretty big level today. Look at this. This is today's reading. I'm sorry. That was out to Friday. My bad. So today, we have 6700, big level. We have lighter levels to the upside. We have a decent amount lower, but seems very sticky around 67. All right. This is like a big bold play. I don't know if it's going to be low risk necessarily, but if I did like an iron fly, so if I could pull more premium, like right there, I mean, we're expecting to move is 4. If I did 50 points, that'd be 45 and 67 by 66.50. I mean, this is a 2-to-1 trade. I'm not going to swing that type of risk on the day. I don't know if we're going to settle here at 6,700. It does seem to be for right now. 67 seems to be the stickiest, largest gamble level for the day. I mean, if we have a nothing burger Fed day, that might be where the market ends up settling. Here's one thing that I have to do. If I took this trade, I need price to basically be around 60. On the upside, it'd have to be around 67.30. So if price was 67.30 or lower, okay, 67.30 or lower, and around 66.70 or higher. I guess 65. So it'd be 35 points. Yeah, so 30 or 65 there. So if I took this trade right now, I'd get over $35 credit. I'm risking $1,400 to make up to $3,000. That's not a bad trade for the day. But is there risk in the trade? Yes. If price is greater than 67.30, there's risk. If price is less than 66.65, there's risk. If I take the trade today, right now, I need price to basically stay within these levels. So if it blows me out to the upside or downside, I'm going to lose. But it's a 2 to 1. And if the market somehow finishes within the day right around this like sticky 6,700 level, that's a big fat winner on the day, which could be pretty nice. Mid on the put fly is 25 cents credit. I'm not seeing it. I'm seeing a 33 cents debit. I'm not seeing it. I'm not seeing a credit on it right now. So that was, I went 50. I mean, I could tighten this up a little bit if I went 40, 55. So that'd be what this is 40 wide and 40 wide. I'm risking 940 to make it's like that's a pretty good trade. That's almost 3 to 1. But again, it tightens it up a little bit. I mean, I need price to be within about 30 bucks. So 66.25 down to about 66.70. This is the type of risk we put on almost every single day. So, do I mind the trade? I mean, it'd be fun to take it on a paper account. I don't mind the trade. Is this the safest way to trade FOMC? Not really. But setting up for like a 3 to 1 is not a bad trade. If we have like a zero direction FOMC day, this is a huge winner. So I like it enough, but I'm probably not going to take the trade. Just because it's like you never know. FOMC is such a wild card. It could be an excuse for the market to move. But if I had, if I had no care in the world, then I would just do this. I'd go 50 wide, taking the entire consideration of the expected move and see if price can stay inside of it. As long as I can get 35 bucks on this trade, I'm risking 1,500 to make $3,000. It's a 2 to 1 setup, and my break even would be around 67.30 or lower, and 66.65 or higher. So, I mean, you have like a 60 to 70 point range to be right. It's not a bad trade. Okay. Where's the risk? If it's above 67.45, above, 67.45, or it's below 66.50, there's risk. So just a couple ways to play it. The other side of this trade would be, like I talked about, some of the extremes. If I wanted to kind of call the top around 6,800 and reject it, maybe selling a 6,700 call, buying the 6,800 call, go 100 wide, and see if that would fill for like $95 credit. Risk 500 to make up the 9,500. Not a bad trade. Okay. So again, I'm throwing it out there like, would I expect the market to break and stay above 6,800 for the day? Probably not. But if we get up to 6,800 and we can reject it, I'd love to short it there and get the market to kind of finish. Let's say it hits 68 and then falls. Be a great sell trade. Let's say that it hits the lows around 66.20 or the lows around 6,600 and then it bounces into the end of the day. Well, I could sell the 6,700 put, 6,600 put. It's 100 wide. Try to get the trade for $95 credit. If it hits 66 and bounces into the close, as long as you cover a $5 spread, you're getting paid. So just some thoughts. You talk about the role of market makers in depth anywhere on your channel. I mean, it's basically the foundation of my daily profit play. So, I mean, in that service, I mean, there's lots of education on how we use the expected moves. The elevator pitch is this: market makers have been doing this stuff for 50 plus years, right? Options were created in 1973. Index options created in 1981. By design, option makers or option market makers or liquidity providers, there's 5-6 of them in the entire world. Their job is to keep things stable. Their job is to provide liquidity. Their job is to keep the bid ask pretty tight and match buyers and sellers. and also appropriately hedged because their role is to be delta neutral. This is why we have, I mean, the options market. It doesn't have to be difficult to trade options. It doesn't have to be, nor should it be. But with trading options, once you understand what you're trying to express in the market, it's just price and time and volatility. That's all option trading is. Now, the crazy part is it's like playing chess. I mean, there's multiple dimensions you can put on here. But the cool part is once you just understand, like, if price is above this level, I make money. If price is below this level, I can make money. Where's my risk? What's my reward? What's my maximum profit? It's all that. It's just a combination of those things. So market makers, what they help us do is every expiration we trade for every stock or every index, there is a calculated move. Indexes are far more efficient than individual stocks. Okay, are individual stocks efficient? Sure. But they have much more of the outlier potential than an index does. It's very rare that an index is an outlier, which is what I run an entire service around. Daily Profit Play is a service that capitalizes on that phenomenon that most of our trades are efficient. Yesterday's Daily Profit Play, we had a winner. I didn't update the tracker, but let me put that in here. We had our combo bear call spread for $1.55. Somebody got filled for $2 and change. That was a full winner yesterday. I don't remember what the strikes were. Let me find it. I think it was like 67.75 or so. Yep, 67.85. All right, so let me update that tracker. What was my starting price for the 16th? Starting price opened up around 66.90. Price yesterday opened up around 67.35. Okay. B. Okay, tracker updated. Go back to the comment here. So again, indexes way more efficient than individual stocks. You can look at this on any option chain, any index. So SPX, SPY, right? XSP, which is the micro version of the SPX. It's index related, cash settled. All of these expirations, all of these plus or minuses, this is the broker and the market makers with their math behind the scenes of calculating out the expected move. Indexes are far more efficient. Okay, indexes are far more efficient than the individual stocks. But when you talk about Nvidia, crazy efficient. Why? It's one of the highest traded stocks, liquidity wise and volume wise, out there. I mean, it's top 3, top 5 every single week with flows. Anyway, it's their job. And so when you take price, that's where the asset is trading at. You take time, that's how long you're going out in this trade. All the calculations for the expected move, there's probability cones, and then you take volatility on top of that. Well, volatility directly correlates in the S&P 500, right? And individual stocks, this happened during the crash of 1987. Individual stocks at that point started getting their own calculations because everything in the Black-Scholes model was so efficient that you're getting these breaking points all over the place in individual stocks. And so they started to give individual like IV ranks or individual implied volatility for stocks and not just the index. Okay. But if you look at something like Nvidia, here's just a ballpark, right? If you go out 30 days on Nvidia, 30 days in Nvidia says the market makers are looking at about a $13.3 move, either up or down. So we're trading at 182. That puts our expected move up to about 195 or down to about 179. I'm sorry, 169. So plus or minus 13 points, right? You go out on the SPY, go out 30 days. 30 days in the SPY, you have a plus minus of 29.18. So we're trading at 668. Let's just round up the 30 points. We have a SPY around 698. Okay. Or we have a SPY around 638, give or take. There's a lot of positioning around these expected moves. And the goal of market makers is to not have to sit here and be forced to hedge. Now they do. If things are all one-sided, they're going to blow through that top or blow through that bottom, they will hedge. They will buy the appropriate, calls or buy the appropriate puts to be delta neutral. Because what they're doing is they're typically just selling premium at these levels. There's a very famous leg of it's an arm of JP Morgan, it's their investment arm. There's a JP Morgan collar trade, and this happens every quarter. So literally January 1st of 2026, it's anywhere between about a 10 to 15 delta, and it's a quarterly sell call and a quarterly sell put. And that creates lots and lots of order flows and hedging around those levels. Most of the time, those levels are respected and not breached. And so what's kind of cool is like every single quarter, so we can do this again April 1st, we can go out and look between like the 10 and 15 delta, kind of give ourselves a range and see if that JP Morgan collar trade is still valid. I don't know what they are. I mean, as we get closer to the end of this month, I'll kind of see what those big levels are. I would imagine that price has gone pretty much nowhere for this quarter, right? I mean, the plus minuses for the quarter were probably hundreds and hundreds of points, and price has gone next to nowhere. So, by the way, real quick, I'm gonna have some fun today. Let me see. I'm gonna take a stab. Let me see if this will work. I've got the let's go SPX. I'm thinking I'm gonna take that iron fly and give a chance to see like, all right, we're gonna hang out around like 6,700 today. Because if we are, let me see if I get more premium for 6,700. If I go 50 wide and 50 wide, I get 32. If I go here, I get 35. So break even puts me around 67.3250 or 66.67. So we got a plus minus 40 on the day. I mean, this is if I wanted to. I mean, the risk is $1,700. I don't love that trade. If I did something like this, still risking $1,700. That's kind of lame. Let's see, 90. All right. Well, for a second there, I thought I had a good trade. So that is 40 wide, 40 wide. I guess I should have taken the trade with a $1,500 to $3K profit. So that's 40 and 40. Let me see if this trade, I'd like this trade to be at $30. If I get $30 credit, I'd be risking 1,000 to make 3,000. I need price to stay within 30 points of this current level. Let's do this. I'm going to set this thing at like $35. Okay. So I'm risking 500 to make 3,500. I'm going to see if I can pin this around 6,700 today. I'm going to let price come to me rather than me, settling for like, the broker says I can make, $3,000, but I'm risking $1,100. I'm going to let price come to me. So I'm going to put this trade in today. I'm risking 500 to make up to $3,500 if I'm within 35 points of 6,700 plus or minus. I'll put this trade in. So I'm going to risk $500. If I'm within 30 points, I've got some profit. If we're close to 6,700 at the end of the day, even better. So $35 credit, not filled. It's currently trading at $28.50 credit. I'm gonna risk about $700 less than what this trade offers up this morning. Okay, so I'll put that trade in. Okay, pending order. Optional if you want to take it. This is an iron butterfly. So I sold the 6,700 call. I sold the 6,700 put. So both at the monies. And then I'm going 40 wide on the call side. So 67.40 is a buy, and then 66.60 is a buy. I'm putting in a $35 credit because that changes my risk profile from risking about $11.50 to now risking only $500. So you can see down here, okay, I'm risking 500 to make 3,500 if it gets filled at $35 credit. How do I get filled at $35 credit? I probably have to see price go down a little bit or go up a little bit. So this is out of the money, which makes this credit come in higher. Okay, pending order. I'll keep an eye on this one for the day. So now I have a top, I have a bottom, I have a middle, and we'll see what happens. Have I seen any credit yet for the bonus trade? Let me check. Right now, the put side, no, and the call side, no. Not yet. I mean, has price moved anywhere? Not really. Price is stuck within about a 7-point range right now. I wouldn't be surprised if the market doesn't move today. The problem is if you take a standard daily profit play today, you may not get paid until later today. And that's my beef with FOMC days is it just takes much longer for the FOMC time decay to really work in our favor. It's like I said, typical time decay looks like this. You take a trade, start to finish, time decay looks like that. FOMC days, it's more like this. And then it drops off hard at the end. So it just sticks around a lot longer versus it should be around, like 11:30 or 12 o'clock, you start to get that really nice decay. By 1 p.m. in our trades, we're getting like, 80, 85, 90% of our profit. But FOMC days, it's like you're going to sit kind of break even all day. Okay. All right. I'll throw this trade in here if interested. I'll add to that bonus trade. So I'll throw in another one. I'm going to put it in the same post. So this is essentially a top trade, bottom trade, and then the next one will be a middle. So SPX 318 expiration, selling the 6,700 call. I'm going, I think I went 40 wide on that. 60. Actually, you know what? I could go, let's see here. I could go a little bit wider. I could go 6750. 6750 call and then sell the 6,700 put and go 6650 put. I can go $45 credit on that trade. Again, that's unlikely going to get filled. So you can either do the 40 wide, that's around the expected move, but this trade is still valid. I risk $400 or $500 to make up to $4,500 pending. Okay, I'm gonna update this trade. So this one, I'm gonna revise this. So if I do 6,700, go out to 50, go down to 50, it's offering 32.40. I'm gonna try to get $45. I don't know if it's gonna fill. Okay. I'll keep an eye on both of them. This one was 40 wide. I'll try the same thing at 40 wide. 6,700, 6,700, 40 wide, 40 wide for $35. I'll take one of them. If one of them fills, I'll cancel the other one, but I'll look to take both of them. Either way, it's going to be a $500 risk maximum. Okay. David, you got 25 cents credit on that trade. Are you serious, dude? No way. Are you sure? Live account, right? Live account, credit. Are you sure? I'm not getting credit on this trade. 25 cents credit, not filling. 20 cents credit, not filling. 15 cents credit, probably not filling. This trade is showing a 35-cent debit right now. I don't think there's any way I'm going to get any credit on this trade right now. Not filling. 5 cents credit. Not filling. So yeah, it's not getting filled for any credit. If you got 25 cents credit, dude, I don't know how. You're literally getting like a 75-cent better fill than I would. So I'm just going to go back to a dollar and keep an eye on this. This is monitoring the mid prices, by the way. So, the call side is trading for like 11 cents debit, and the put side is trading for like 40 cents debit. Now, I could tweak this and go down like $15 profit traps instead of $2,000 profit traps and maybe see some credit. So never mind. I see what you're doing, David. Well, no shit. Look at what's happening. You're only doing a $10 profit trap, and you're going, 25 wide. So you're way different on the risk profile than I am. Yeah, okay, that makes sense. All right, so you're going 6,600 by 6,590 by 65. Well, sure, you're pulling in quite a bit more risk than I am, right? So now you're risking 1,500. It's like, yeah, you can get credit on this. That makes sense. Like, it's fine. You want to get some credit? It's credit. Your risk is a lot higher than mine if you're wrong. But the probability of being wrong is 2%. So I still like the trade. Like, yeah, it's not a bad trade. So let me see here. If I went 6605 to 95 to 70, what's this look like? I mean, this isn't a terrible trade. Now, I don't have a big fat profit trap. I got $1,000 profit trap at the end of the day. That puts my break even around 65.85. And here's what I'm going to just double check on. If we go to the VIX box lows, that's around 66.20. Okay. I mean, so unless the VIX is going to rip all day, it's like, I think it's a good trade. I don't love the 1470 of risk. I make 25 to 30 cents on the trade. It still offers a profit trap. I just like a tiny bit more profit trap if I could get it. Like this trade, I get a $1,500 profit trap. Like this one, I'm okay settling with. This is $1,500. Give me, maybe 10-cent credit. I don't know if it's going to take it. If it does, I'll throw it in there. But that's a $1,500 profit trap. I'm just trying to go a little bit wider than 10. So can I get filled for 10 cents credit? No. And if I put it at 5 cents after fees, it's essentially worth zero. All I have is a free profit trap. So I'm going to cancel that trade. So 6605. So 10 wide. I mean, like I said, $1,000 profit trap, high probability, 98% chance of profit on this trade. I like it. Could I get 35 to 40 cents for it? Sure, but I'm risking, $2,000 on this trade. Now I'm risking less, get about 30 to 35 cents. It's not a bad trade. Am I overlapping if I do this trade? I'm not overlapping, which is kind of nice. I've got a $1,000 profit trap. I'd still be risking. I mean, if we make fresh lows and we breach 6,600, there's some risk in the trade late in the day. But even through my VIX box, unless the VIX is going to rip to like 27, 28, 29 today, I don't think this will put me in a lot of trouble. Fudge. It's just a choice. I mean, do I like the trade? I mean, I like the structure of it. Do I want to take the trade for 20 cents to make? I mean, it's a credit trade. It's basically a nice profit trap unless price goes too low. Then I'm taking on some risk. But let me see. I mean, maybe this one isn't bad for $1. I'll put it in for $1. I'll join you, man. I'll go a little bit crazy bin with you. I'll go dollar credit. That way I'm risking 1,400 to make 1,100. If price falls a little bit more. I don't know if I'm going to fill for $1. Maybe I do, maybe I don't. But gamma wise, 100% ATR is, 100% ATR is 6630. It's like it'd be very difficult for us to get through 6,600 today. I'm not saying that we can't, but it's unlikely. So if I position for this, at least there's some credit coming in. I'll take it for $1. I'll take it for $1. Okay, pending order. How do you deal with the down days? You just step away for a bit. I mean, I don't know. What's a down day? I mean, it's like ebbs and flows are always happening. Like, I'm down for the day. Well, this is like fractions of 1% for me. Am I down? Sure, but it's open option volatility, it's open exposure. So if you're asking for like, how do I deal with the down day? It's like, I mean, we've had lots of down days. We still make money. My goal is just to keep taking good trades. Every trade I've taken, it's like there's a reason, there's a why, there's probability behind it. I just accept that I'm gonna make more winning trades than I make losing trades. You know, what I don't do often is I don't take huge trades hardly ever. I have to really, really love something, whether it's a stock, gold or silver, an index. I mean, I've got to love where I'm at position wise. Like I rarely get those alignments. I would say this. I talked about the market breadth this morning. I would be willing to take a bigger stab on the broader market if we had a just a fantastic, once in a every couple of years type alignment where I'd say, okay, I'm gonna go like synthetic long and I'm gonna own like 1 to 500 shares of something, 1,000 shares of something. Like I've really got to love it. If I don't love it, then I'm just taking like calculated base hits, and my risk is going to be between, a couple $100 to a couple $1,000, and I just play in that ballpark. Base hits, base hits, base hits, and I just trust that I can make more winning trades than losing trades. Okay. All right. Now, all right, this trade I just posted is a little bit different. I'm seeing like credits around 30 to 40 cents right now. See if we can get this trade for like 50 cents. I don't mind taking this thing for 50. We're going to drop a little bit. So I've got a penny for $1. Take it for 50. Let me see if this, I'm still watching this put side. This is still trading for like freaking 30 cents debit. This is 50 cents now. Can I get a 50 cents credit on this one? Probably not, but I'll try. All right, we're trading at least around 50 cents right now. So if price is going to fall, I mean, again, I don't know if it's going to happen, but if price falls towards these gamma levels, we should have a chance to get this thing filled for $1. See if I can take this for 45. I'm putting a little skin in the game if I get filled at 45. I'm taking it's a decent risk. If I put this trade in, I'm risking 14.55 to make, basically it's a 45-cent winner, but it's the profit trap of $1,000 that I'm kind of interested in. It's going to be close. Put this back up to 50 cents. I really want, ideally, I really want like a $1,500 to a $2,000 profit trap if I can get it. That would be pretty ideal. $1,000 is great, but $1,000 can slip fast. And you have to typically wait all the way to the end of the day. You get a little bit of that bonus profit early if you're at like 15 or 20 wide. That can kick in pretty hard in the final like 60 minutes. You got filled for 40 cents. All right, that's decent. Okay, let's try. I'll try 40 with you. All right, you might have gotten filled right on that last couple of minutes when we had the low around 66.81. All right, I'm going to put it back to 50 cents. I'll put it back to 50. I'm going to put it at $1. So I'm going to take both of those levels. And then if that put side one, which is right now trading for about 40 cents debit, if this gets down to like 5 or 10 cents debit, if I have any credit from the other broken wing butterfly, I don't mind paying a very small debit to like give myself a $20 profit trap. So I'll put it for 50 cents, put it for $1. See if either one of those get filled this morning. Okay, good, Mark. Yeah, that was a good fill. 40 cents is good, man. So Moses, answer your question, I mean, so what happened? Like, what's your down day? I mean, give me an example. I mean, I've had some shitty days. I mean, we've had days where, I did some over trading. Especially in a zero DT, it's like I can figure out how to strategically, like, get a couple extra trades in, maybe mitigate some of my risk, and price still, didn't cooperate, and I end up taking, a loss in the day. One thing I always look at is like I do a pretty good job of segmenting my days. Like a day trade, if I'm zero DTE, the name of the game in zero DTE is survival. Like you have to be able to stomach a loss, right? I know that in any one day, think about this, any one day, anything can happen. Things should happen with probabilities, but there's also outlier days like October 10th, November 20th, Jackson Hole, a Trump tweet where the market rips up, like, what was that, last, not this week, but last Monday at 3:15 in the afternoon, when Trump wasn't even supposed to talk until after the market was closed. Market ripped up like 70 points in 20, 25, 30 minutes. That shouldn't happen, but it did. And I ended up taking like a $500 loss in the day. Could have been way worse. Could have been way better. I could have actually managed my defense trade a lot better, but I freaking, tried to hang on there. I don't know. Anyway, in the moment, I was like, well, defense could get really, really good. And then price just stayed right around my expected move. So I ended up taking a small loss in the day. Um, anyway, point is, if mentally I can kind of compartmentalize, like, if I trade for the day, I try to win the day. If I lose the day, my goal is to survive and show up the next day and trade and win, and I'll make it back in, 3, 4, 5 trades. The way that I take a risk in the morning like this, I typically have to take slightly bigger risk than reward, and I know I'll make it back. So it's just not beating yourself up of like, why did I do that? Or what, I did this all wrong. It's like, I usually don't break my rules. And so if you have a bad day, it's just, yeah, like mentally figure out, like, are you going to step back in there and trade again? One thing I don't like to do is revenge trade. I typically don't, double and triple down and say, okay, I lost it, I got to get it all back. It's like, I don't. I know that my process is, if I lose on a day trade like this, because it requires me to take a bit more risk than reward, I usually have to take 3, 4, 5 trades to get it back. But those 3, 4, 5 trades, I can knock those out in a couple of days. I can knock those out in a week, and then I'm back to break even or better, and I'm making money for the year. Like, it's just a game of, can you survive and show up and trade the next day and not let. Here's the most important thing: can you get through a loss without feeling like you have to change your entire strategy? Most traders will spend years and years and years just trying to avoid losing. And the reality is, losses will happen. We, like, literally in this service, we do so much planning and prepping every single day that when we lose, something odd has to happen for those days, because it's rare that it happens. This is why we have a high win rate. This is why we win almost every single day. This is why we also have to show up and trade the next day. Okay. I've had traders in this service that have made tens of thousands of dollars in profits, and then they take one loss, and they, it's like Mike Tyson says, you have a plan to get punched in the mouth. That loss sets them back mentally, where they think, I need to risk less. But you were just making $20,000 in the last month. And now one loss that sets you back, it's like, I get it, but this is why I always teach, it comes with risk first, right? Risk first, risk first, risk first. Set your risk so it never scares you. Set your risk so you're never uncomfortable. You can take any trade in the world if you can stomach it. And that's where just repetition and live trading experience comes in. It's like you find your comfort level. I still do not love taking, $5,000 to $10,000 swings in my account. I don't. But I'll take $1,000, no problem. A couple $1,000, no problem. But it's a percentage game for me. Why would I take a trade that's going to cost me, if I'm wrong, if I'm going to be taking a big swing for something where it's like, I can make a lot of money in this trade, then I better have a plan A and a plan B and a plan C that can repair that trade or get me out of trouble. So in my Project Options Edge service, we take a lot of these trades where I'm willing to own the stock. So even if I took on heat or volatility or drawdown, I can repair that trade for a likely win. I don't have to take a loss. I shouldn't have to take a loss. So I position the trade that way. What, daily profit play is a little bit more binary. It's a zero DTE. There's only so many things I can do to defend myself every single day. So I accept that I'm going to win most of my days, and that's what I look forward to doing every single day. But in the event that I do lose, it's going to be typically something weird happens, something outlierish happens, something out of the norm, out of the expected move happened. So it's just getting comfortable with that reward and risk. It's getting comfortable with the percentages, never taking a trade that's too big, and being willing to show up the next day and keep trading. You know, But I think it all comes back to trade size. Trade size. Too many people trade way too big, and they put profits first. What can I make? I want to make this. I want to make this. That's great. But if you're trying to make $100 a day to risk $5,000 a day, here's a crazy story. One of the guys I work with, and I love this guy. He's a great trader. Okay, he's risking about $100,000 a day to make 1,000. That is a courageous trade. And he's made $50,000 since like October, since like Halloween. He's had like $50,000 to $60,000 in profit. But all it takes is one outlierish day with a 0.5 probability, 0.5% probability. That's all it takes is one of those, and he'll wash away, 3, 4, 5 months worth of those profits. And that is like, I just don't ever want to take a trade like that. And he might never lose. He might never lose. And he might make hundreds of thousands of dollars with it. But it's just that one time where it's like, if you do lose, though, it's just a huge reset. But he knows how he got it. He knows how the process works. He knows the risk. And it works. But I just don't like that, one bad day can set you back months and months and months of good trading. This is also why, how many of you know Tasty Trade? You know Tom Sosnoff, and he was in Tasty Live. He built Thinkorswim. Him and Scott Sheridan now doing Lost Dog and One Lucky Dog, and they're launching their network. But they've been with Tasty Trade for like 13, 14 years. One of my favorite platforms, great broker, and just he is a huge advocate for trade small, trade often, right? If you read one of their best-selling books is Julia Spina, who works with Tasty, The Unlucky Investor's Guide to Option Trading. Great book, a lot of math. The bread and butter trade at Tasty is a 16 delta naked strangle. 16 delta naked strangle. Here's the exact, you can see it in the book. You can see it on Tasty Live. They talk about it all the time. A 16 delta naked strangle is this. You go out 45 days. So days to expiration. You're doing a SPY. Okay, because usually buy power wise, like SPY, buy power, you can do this on XSP as well. XSP is doable. XSP is actually a very good alternative because you can have this be cash settled. It also takes a lot less buying power than it does SPX. Anyway, you go 16 delta, so you sell a 16 delta call, and you sell a 16 delta put, and you pull in. You're looking for, I'm trying to think. Whatever the credit offers. Ideally, you're trying to get 20 plus VIX, and you can take this trade, and the likelihood of profit is very high. But you collect credit and then manage at 21 DTE, like clockwork. So typically, this type of trade, this style, will give you somewhere between like 25 to 50% max profit winners. But it is, it just got filled at 50 cents, by the way. Undefined risk, which means outlier moves cause a lot of trouble. So there is absolutely nothing wrong with this trade. The only issue that comes with this is when you have, let's say you do this all the time. You love this trade, right? You're making money, and all of a sudden we have Liberation Day 2025. And this naked call, naked put, the undefined risk sets you back thousands and thousands of dollars. Okay? Most traders don't have the patience, don't have the discipline, don't have the courage to ride these trades out and try to mechanically adjust them, which is why I always say when options trading, you can have a plan A. I want you to have a plan B. a plan C, and a plan D. A is what should happen most of the time. B is what could happen, as a way to fix your trade. I'm really A and B is important. And point is, undefined risk. This is what I see everyone's P&L look like. You make a bunch of money. You're super happy with the strategy. I'm making so much money. I love it. I love it. And then one outlier type event, which is going to happen. You know that something's going to happen. You know how many traders this year were trading strangles on oil? They damn near blew up their accounts, right? Oil has been in a tight range for probably 6 months. So all it takes is one move like this where oil's up 115%. You can't survive that trade. You have to roll, and try to now probably traders have taken a 45-day strangle out, 360 days, and they're just trying to repair it. And now they're going to sit and hope that oil is contained. And they're going to get lucky if they do, but it's like now you're putting all of your eggs in that basket to just fix a bad trade. What I'm saying is undefined risk can be incredibly lucrative until an outlier type event will mess you up. And I see traders do this for months and months and months. One outlier event essentially resets them, but you know how to make the money. So rather than giving up on the strategy, you got to get back in there and do it again. And you'll survive it because this is such a rarity to happen. You know how you got there, right? So anyway, point is, I don't like to take undefined risk trades unless I have a backup plan. And so this to me is not an easy trade to have backup plans because you're going to spend a lot of time fixing bad trades on the rare occasion that a bad thing happens. And the same thing is true on the upside. Gold, traders that were strangling gold and it was going nothing but straight up. It's like you're getting busted up on that trade. Well, now maybe it's getting fixed a little bit, but any type of outlierish move will absolutely make your life miserable. So I just don't like those type of days. I don't want to take that type of risk. So I'd rather define the risk, pull in a little bit less credit and premium, which makes my P&L curve a little bit slower to grow. But, this would be my undefined risk. And then an outlier day is just like a little down day. But I keep trading. It's slow and steady, but it's like my P&L is just much tighter. And then mentally, you're just able to absorb that loss, no problem, because it's risk defined. So I may not have like the awesome leaps and gains of undefined risk, but I just see that happen way too often. And that's never fun. That'll make you question your entire strategy very quickly. One bad event that's not in your control, right? One bad pricing event that has nothing to do with your plan. You did everything right, followed a plan, and you still get your butt kicked. That's not fun. So I'm trying to say, I don't want to trade that way. Anyway, I got filled on the 50 cents. So that 10 wide is filled for 50 cents. I've got a 66.05, 65.95, 65.70. I'm in this trade. I have a $1,000 profit trap. Price would have to fall all the way down to 65.85 for me to lose. Right now on that position, I'm having about a 94% chance of profit on the day. Let me check and see. My put side is now traded for 80 cents. What the F, dude? Well, that debit's getting worse. Let me see here. So that's 10 and 90. All right, let me play around with this. So if I go 15, 66, 75, that's a small debit. There's another 50 cents credit. Might as well try it here. Let me see something. If I go another $10 profit trap below this, so that's 10 wide. Okay, let me try to get this one in for, try this one here. So maybe a 20. This is another $1,000 profit trap. Let me try 25 cents on this one. Make sure these aren't overlapping. I don't think I'm going to get that initial trade filled. Let me try to get 20. So if I go buy, sell for 15, 45, can I get this one at a credit at all? Okay, this one offers me a $1,500. I'm going to take this trade. This is a 5-cent debit. This gives me another $1,500 profit. I'm going to take this trade. 5-cent debit. All right. So I got 50 cents on a butterfly, 5 cents debit on a butterfly, but now I have a up to a $2,500 profit trap. We go to working here. This 6610, 6590 is most likely not going to be filling for a credit today. I'm going to cancel that trade. And then I'm going to look at this overlap pending puts at $1. I'll cancel this trade. All right. So now on the put side, here's what I have. I have a 6605 by 6595. That's 2 contracts. And that spacing is 6570. So this is one of my butterfly trades. This one filled at 50 cents. So this trade you're seeing on the screen filled for 50 cents credit. So I'm risking 1450. Okay, I'm risking 1450 to make 50. But if price is down here at let's say 6600, I do have a potential profit trap there up to a $10 profit trap. So later in the day, this could be, very exciting to have late in the day if price is going to fall down towards like 6600. That's an if. All right. So that's one trade. The other trade I just took is I moved my strikes a little bit lower. So delete, delete, delete. I bought the 90, I sold the 75, and I bought the 45. That trade got filled for a 5-cent debit. Okay. So it's a 5-cent debit, which means that my 2 combined trades for the butterflies are going to net me around $45. If price is greater than 6605 today, I'm going to keep $45 profit. I'm not that excited about $45 profit. Okay. But it's a safe way to trade FOMC. If the market starts falling lower in the day, that profit trap might kick in if we get closer to those lows of last week, which are around 6620, 25, maybe 6600. So the most important thing for me right now is I know my break even. My break even price is 6585. And my break even price is 6560. This one has a $10 profit trap. This one has a $1,500 profit trap. So if price is greater than these levels today, I'm going to make some money on the day. If price is going to be testing these levels, I might be able to chew into some of these profit traps and maybe see a couple $100 of profit. Okay. 67.45, 67.20, 67.35 is getting close to getting filled. What is that one, David? 67.45, 67.20. What trade is that? 67? 331s? Oh, is that an engineered option? What trade is that? That doesn't sound familiar for me. Bonus trades. So that is a okay. The numbers are throwing me off because 67.45 and then 67.35, 67.20. That looks like a broken wing structure. That'd be 10 wide and 15 wide. So I mean, I could see that being a bonus trade. Yeah, let me see what I have here. So let's go SPX only. Well, it was a 331 expiration. So I've gotten the 65s here, 65, 20, 10. That's out to the 31st. I mean, that's a good looking trade. That's a 10 wide profit trap. It's I'm not seeing the trade. I've got a 65. I don't know why I'd have anything with 67s. You sure it's 67s? Oh, there we go, right there. Oh, that's engineered options, dude. Isn't that engineered options? I'm risking 250 to make 250 with a $1,000 profit trap. That's engineered options. I mean, that could be a great trade. But we're trading at 66.70 and my strikes are 67.35. So I mean, obviously I'm still risking money on that trade. But that's an engineered option trade. That's my engineered options like monthly bonus. We did have that bonus class. Okay, so I'm gonna do this. I will add this. So daily profit plan. Today's session is free for everybody with my trades, since it's not a typical daily profit play trade. So here's what I have running live. SPX, I have the 3/18 expiration. The trade that just got filled. I have a 50-cent credit and a 5-cent debit. And I'm trying to get those things, pinned around the 6,600. I mean, if we fall to 6,600 today, great. But the market started at 67. We had a plus or minus 54 on the day. It's got to go 100 points. Pretty sure that shouldn't happen. But if it does, I got a profit trap sitting down there. So anyway, buy the 66.05. Sell the 65.95. And the 65.70. Okay, so I am risking 1450 max risk. If SPX is less than 6570, I have a $10 profit trap. If SPX is 6595, end of day, break even price would be 10 wide, so 6584.50. No risk unless SPX is lower. So as long as price stays above 6584.50, I don't have any risk on the trade. Now there's going to be some drawdown and stuff because of the open volatility, but that's where my price would have to be lower than for me to take on any risk. Next trade, 3/18 expiration. I bought the 6590 put, 6575 put, and 6545 put. 5-cent debit. Okay, so this one has, that one also has some risk on it. I'm risking 1505 because it was a debit. So 1505 max risk. If SPX is less than 6545, which very low probability of that happening, but I still want to know the risk. $15 profit trap. If SPX is 6575, end of day. And a break-even price would be 75 minus 15, so 6560.05. No risk unless SPX is lower. So net on the day, I'm not excited about making 45 cents. Okay? I'm not excited about making 45 cents. But if price is going to come down and threaten, let's say 66.30, 66.20, 66.10, maybe 6600, and this happens later in the day, this could be a pretty good result. Okay? So I accept the risk. If I lose today, I'm going to get blown out to the downside and the market's going to have to drop. Let's check the numbers here. 65.95, what's that for a sell-off? 65.95 from yesterday's close, 65.95, 65.95, we'd have to drop 1.8% today. Is it possible? Sure. Is it probable? No. So that's one of my break evens. The other one was 68.65. Or I'm sorry, 65.65. There. So we'd have to drop anywhere between 1.8% and 2.2% for me to take a loss on the day. So again, could it happen? Sure. Market dumps 3% today. I'm toast. I'm getting my butt kicked. Okay. Unlikely though. So I got a couple profit traps in there. One thing that might be interesting to do would be maybe some cheap insurance. So with my break even around 95, maybe something like this, like 60 to 95. That'd be 35 wide and then 25 here. I'm just curious what this cost me. Cost me $1 for that debit. Okay, I don't want to take that trade for defense. This trade, debit, little defense there for like 34. I mean, again, I'm not trying to give this, that's 20 wide, 20 wide. I mean, I've got some defense there for, I don't know. I'm gonna hold off on the defense because all I'm gonna do is like chew into more of my potential like 45 cents. So let me just hang out for right now. I mean, Gamma is lining up. There's a pretty thick put wall here around like 66.50 to 66.35. Take a look at the expected move for the day, right? I mean, down here towards 66.35. Yeah, I mean, that lines up pretty nicely. Get a decent amount of support around that like 40 and 30 handle. So does it hold here and then push back up? I mean, hang on one second. Crap. I think I've got maintenance guy showing up. Give me 1 second. I hate to cut the session off like this, but I've got to go show this guy what's up. Let's do this. I will be back this afternoon. Deanna, I think we are switching gears today do we have a stream ready to go? I can't read live right now. Live later in the day. Okay, what time? I've like stacked sessions like all day. I'm just not. Oh, okay, that's fine. Okay. All right. Here's the deal. I got to wrap the session here up. I will be back for closing playbook at 3:30. Come back and join Nate, Kane, and I for a build a trade. We'll be here at the end of the day. We'll see where prices are at. Here's what I'm going to say. I'll leave you with this. If the market bounces around 66.50 or 66.35, that is showing that the market makers care about that expected move. That's a good thing. Okay. So we'll keep an eye on this for the day. I'll let you go for today's daily profit play. The day isn't done. There's a lot of trading left. And come back and join me this afternoon to see how this all plays out. Okay. Am I canceling the 50 wide? No, I'm going to keep it. I'll keep it because if we come back up to that, I'm only risking $500 on that iron fly. I haven't been filled yet though. So anyway, I got to go. Kids crying, and we got a maintenance guy here. So I'll see you this afternoon. All right. See you soon. Bye.